Catapult and Commissions family. What's up, team? Welcome back to this week's episode of the Catapult and Commissions podcast. I'm your host, Anthony Garcia. Today's guest is a podcast host himself with an amazing podcast, which I think is one of the best names. I have the host of Business with Beers, Brian Beers, on the show today. Now, a little bit about Brian. He is the president of the Prenlyn Automotive Group. That has been a successful venture of his where he has 24 locations. We'll get a little bit of information on him. He's been running for almost the past 12 years. He is the host, as I said, of Business with Beers, which he's been running for the past year. I highly recommend you check that show out. You'll find the link in the show notes below. And he has been inspiring entrepreneurs to massively grow their income and contribute by investing in people, process, and technology. He is overall a career-long entrepreneur with a successful background, and I'm glad to have him on the show. Brian, welcome to Catapult and Commissions.
Hey, Anthony, thanks for having me.
Glad to have you here. So, one of the things I got to dive into it here, right? So, you have been running a successful employment opportunity, and Catapult to Commissions family, I'm going to circle back on this, but what I want to cherry pick here is we have an audience that makes majority of their money commission based, either all of it, some of it, very much like entrepreneurs only make money when they produce revenue. So you're in that same key. I'd love to start, right? The average businesses, half the businesses fail within the first 5 years. You've been running the Prenlyn Automotive Group for almost 12 years. You have 24 locations. What is the key to longevity in your business?
Yeah, what all comes down to, I think, having great people on our team. Our success and failure is all determined by, the quality of the people that we hire and then the tools that we give them. And so, our goal is to hire great people, provide them with all the tools that they're going to need. And then, then it becomes accountability of, we expect results and we expect our stores to perform. And, we don't really want to hear excuses because we know that each store and each team is able to produce a lot. It then really comes up to the team and are they motivated and are they aligned? Is the culture good and all those things? Because if we get all those things in place, we fix cars for a living. Cars break. They need to be fixed. People are going to go somewhere. It's just a matter of, do they choose us? And then if they have a good experience, are they going to come back? And it's really that simple. So,
you say that, and I hear the approach of people first, which I think is fantastic. I wish more businesses would focus on people first. But you say you guys fix cars, right? So you fix cars, you provide a solution to a problem there, but you're retaining your people. I mean, you've been there, you've been running this for 12 years. The company's been around a little bit longer than that. What is, when you say you give tools to people, what are the tools that you provide to your employees to want to stay long term?
Well, I think it's a couple different things. I mean, first of all, our company's been around since 1976. My dad and uncle started it with one location. They grew it to about 6. I joined after college. I knew nothing about the automotive repair business, and they were actually getting ready to close them because it was like 2010 and business wasn't good and they retired. And, so I breathed new life into the stores and, have since grown it from 6 to now 24, all in the Philadelphia, New Jersey markets. And, some of the tools, it's culture, right? So I was key on building culture. So we're big into Slack. Every front shop person, managers, assistant managers, even in now technicians have accounts. And, through that, we can celebrate wins. We can create this community, celebrate birthdays, anniversaries. We have weekly Zoom calls. And the first thing we're talking about is, hey, what's a win for the week? And so I think, having a positive mentality, especially with all the negativity in the world and with COVID, it was like daily death counts and all this stuff. And we're trying to breathe that, hey, there's a lot of good things happening. There's a lot of wins. So, especially for salespeople, I mean, you got to be in the right headspace. And when we talk to customers, right, we got to be positive. And so the next tool we do is training and kind of what's our process for the sales approach. And starting off with something positive about someone's vehicle is like literally is the number one thing we talk about. So, you can tell them, hey, that the tires are in great shape or the suspension's tight, or hey, we checked this and it's good. Like, people want to make people feel good and comfortable, and, starting with something positive is a great way. Additional training. We have a lot of finance tools. Finance for us is a big key part of our business where, auto repair is expensive. It's unexpected. And so we have a number of third-party tools that allow us to get people 6 months, 12 months, no interest. We have no credit needed programs for people in a tight spot. And, anyway, we have these solutions, we have these tools. It's up to our people to communicate this with customers so they can see the value, build trust, ultimately, use these and help make it affordable, and get the cars fixed. So, those are the big ones I really focus on, is culture, training, and then some of these technology and other tools that we have.
You provide solutions for the problems your customers or your employees face. I think that's, I love it. I mean, we've all at one point in time in our lives have had to have our car repaired. And I know, when I was younger and I had to have a used car repaired and I didn't have the money, some of those 6 months, 12 months, I mean, it makes things totally feasible. But what I like more is you're celebrating the wins for the week. You're training, you're building a team, you have everybody there. So I think that camaraderie that you create, more companies need to execute it on. So like if my Catapult to Commissions family, I think of some people who have small insurance agencies or real estate agencies where you have this group of people. The more you create that connection, the more people want to perform. Brian, I have to jump into something here. I mean, your podcast, Business with Beers, and you've grown, the business from 6 shops to 24 shops. And so I'm gonna connect the dots here. All right. Catapult to Commissions family, we have made large commission checks. Money comes in and it grows, right? Or we hope it grows. Brian, you took a company from 6 locations to 24. There's growth there. Let's put the two together. Sales professionals, entrepreneurs, I'm putting in the same category right now. What are some of the things you did from a financial standpoint to ensure your company was built for growth from 6 to 24? And how does that relate to a salesperson who may sell a home this week and get a $60,000 commission check and is like, man, I'm growing? How does that person who's selling continue to grow their business, much how financially you grew your businesses from 6 locations to 24?
Okay. Yeah, it's great question. And, for us, we always looked at our business as the best investment that we can make. And so, intentionally we would keep, we follow this thing called Profit First, which is a book by Mike McAllowitz. I'm sure many have heard of it, but it's kind of a system where money comes in, you have multiple bank accounts, and then you transfer money out of your like incoming bank account into these accounts. There's a profit account, a tax account, and then like a general operational account. And so, we would intentionally, money would come in, we would transfer it into this profit account, and it would still stay within the business, a portion of it, and a portion we would take personally. And then a lot of times when, we're proactively looking to grow. So a number of these deals, it would be us having multiple conversations with our target, the target acquisitions. And then when we had something on the hook, I mean, we would then pile up the cash so we could make that investment into the business. And so that's part of it, is, strategically keeping money with the intention of reinvesting it back into the business, because, we can also get seller finance deals where, we can, one acquisition, was over $1 million, it was financed 80% by the seller. So we only had to come with, about $200,000 down. And, we have that 200,000 out of profits that we've made from other stores, right? It's this like compound interest effect. And then, immediately that thing is making more money. We're going to over 100% return on our money, on that $200,000 investment. So, we've learned that over the years, and there's some discipline that comes with it. On the personal side, now what I do is a similar to the profit first mentality. So I have multiple bank accounts set up. And so for me, I have like an operating account, I have a savings account, and then I have what's called an investing account. And so into my operating account is what I take as a salary. So whatever my W-2 is, that's what goes into that. And then out of that account is kind of all my living expenses. So the mortgage, my credit card, different insurances, whatever, like the day-to-day life. And so that account stays like pretty steady. Money comes in every week or 2 weeks, whatever, and then it goes out and then it comes in. And at the end of the day, it's the daily average balance is about the same. And then all of our distributions. And so for the high, commission guys, this would be their, the big commission checks, whatever has to go into that, the minimum into the daily spend bucket, you put some into whatever your emergency savings is. So for me, it's about 6 months of cash that I want, that I, try not to touch. And then the rest goes into my investment account, right? So I fill that investment bucket up with all the distributions that we take from the business. And then all that money is then deployed into investments that we're going to make. And my goal is to turn active income, so money that we make through the business, into passive income, which is then money I'm getting to just the mailbox money, right? So we invest in real estate syndications, we do hard money lending, we do a couple other activities that are similar to that. So the money comes into this investment account, it fills up to a certain amount. Let's say it's $50,000, which is normally the minimum for most real estate syndications. We make this investment, right? And then that investment makes money. And then every month we're getting money back from that syndication. Maybe it's a multifamily apartment building or something. And then all that money though gets redirected back into the investment account. It does not go and mix into your personal account, because what happens is this thing called lifestyle inflation, or income creep, or whatever you want to call it, where the more money you make, the more money you spend. And so by intentionally setting up these bank accounts and intentionally directing money into the appropriate places, you resist the urge to say, hey, I got all this money, I'm going to go buy this new car, I'm going to buy this new house, I'm going to spend it on these things, where you can kind of contain your living style comfortably, or whatever degree you want, within a certain number. But then you get compound growth from all these investments. And so we kind of learned it in the business, and that's how we operated. And then now, we're operating on a personal level in order to, like I said, turn this active income into passive income.
I love the structure you have with it, because as a business owner, it's very, I don't want to say it's easy, because it's not, but as a business owner, I feel sometimes I'm more incentivized, or I'm more motivated to create my funnels of allocating funds for my business, right? I know I have payroll every month. I know I have marketing fees. So you're doing that. Where and I Catapulted Commissions family, you've heard me share the story. The very first business I opened, I also closed within 3 years, because I didn't know the difference between personal income, payroll income, tax income. I just thought, man, I'm making all this money in Vegas seeing fun on the weekend. And that didn't work out so well. So I definitely learned that lesson 16, 17 years ago. So I like how you turn your personal income into that same segment, right? You talked about avoiding that lifestyle inflation with Catapulting Commissions. Family, you guys have, we've talked about that before, right? Live below your means as long as you can. So when you go into this operating savings investing account, let's just be honest here, right? Let's say you have a good quarter, or your income from the business increases. Do you adjust what you like? How do you make those decisions that you're going to pay yourself more? Because I look at it from the aspect of, we'll use the same real estate agent to close the biggest deal of the year, and they get a $60,000, $50,000 commission check. I know this firsthand. They're like, oh, this is awesome. I'm going to go buy the Rolex and do the vacation and do a bunch of other crap. So how do you make that decision when to pay yourself more?
I've got my goal and my vision is long-term wealth creation, is generational wealth. And I have 2 young girls, and I want to teach them all this stuff. And so for me, that is the bigger reward. And I know that every dollar that I can put to work and invest it, that can earn compound growth, that is way more rewarding to me personally than, a fancy watch or anything else. So honestly, I want to take it out of the business. I want to reward myself, but then to me, an equal reward is I'm able to place that into, an investment that I know is going to double or triple in a couple of years. And so, for me, that's because I have that vision in my mind. I think for most people, that's, you need like a bigger goal that you're shooting for, and not like living day to day. The other thing that like Profit First does and my system does is you're supposed to intentionally like be a little tighter on your expenses. And what that does is, like, for most salespeople who are money motivated, if I look at my, one of these accounts and it's low, like that motivates me that, all right, I gotta like pick it up, and we need to take action. Now in reality, we got tons of money, or wealth is building up in these kind of e-liquid, assets and these different real estate syndications. So the wealth is still there. However, because I intentionally keep the balances tighter, it motivates me to work even harder to make more money, whether it's through, motivating our guys, getting sales competitions going, whether it's me, personally taking some actions, saying, all right, what can I do personally now to drive more income? But there's this other issue. If all your money's in one spot and you got whatever, a comfortable checking account, I think you get lazy too. And you feel like you got too much money, and then you can go and you can spend this money. You don't have to call that prospect back. Like, you're good for the month. You hit your number, right? Like, and it's demotivating. So I'd rather put all my money to work, have it earn other money in other places, and put myself on the clock for continuing to produce. So I don't know. That's what I want to do. I want to build wealth long term. So, that's what motivates me.
It goes to show, that the money's not everything. And you mentioned that salespeople are money motivated. And I've debated this numerous times, either on the show or at sales meetings or with other sales managers. I truly believe the best sales reps are never money motivated. I believe they're recognition motivated, they're reward motivated. They're motivated by what the money provides them. Because once you make a certain level of income, what you just said right now, Brian, it's a level of complacency where sales reps just get complacent. Like, oh, I have money in the bank, I've hit my quota, dude, I'm just going to kind of skate by. So I like how you take a look at it, and you look at what's the greater good for your motivation to invest money. You mentioned your family, you mentioned generational wealth, and I talk a lot about my goal with catapulting commissions is what's my legacy that I'm leaving behind, which there's a definitely wealth component to it, but I look at it like, what is the legacy that my kids are going to say about catapulting commissions and what we've built. So it's never really short term, but money comes short term. Social media makes me think money comes short term, right? I mean, it's such an unfortunate bull crap of reality. So what, and I'll preface this by saying this, but Brian is not your financial advisor, so any advice that he shares on the show is just for him and I, for you to do education. So this is not Brian telling you go do this or don't do this. This is just 100% him and I having a conversation. So I want to ensure that we're clear here, so no one comes back and bugs Brian down the road. You said this is bull crap or whatever.
Yep, sure.
So Brian, you mentioned the system you have, and I know that you're building your program and you're coaching people on investing and being strategic with their money, and how entrepreneurs can build generational wealth with their business. You and I have spoken about this. I believe sales professionals, the best of the best, are entrepreneurs themselves because they want to continue to drive. What are like the 2 or 3 investment hacks they should avoid? Like, what is something that someone comes to you or someone says, like, oh, I'm going to do this because it's glamorous, it's sexier. Like, what are some of the mistakes they're making when people want to try to invest their money?
Sure. Yeah. I think if there's a number, I have 2 core principles I really look at. Number one is keep it simple, right? So only invest in things that you truly understand. And so if someone comes to you something and, it sounds flashy and there's all this money to be made, but you don't understand it. Personally, I stay away from that, and, in crypto, right? I own Bitcoin, Ethereum, and I dollar cost average. I keep, for me, that's simple. There's guys, all the stuff and NFTs and Web3 and mining and all this stuff that acts like these guys are making a ton of money. And it's like, I don't know, for me, I don't understand it. I don't get it. I'm not going to invest in it. So that's a big one. The number 2 is, we talked a little bit about this, but it's the power of compounding, is continue to focus on putting every dollar to work, no matter what it is. I think that's huge. Another one is, I personally am getting out of the stock market. I am focused on almost entirely on private investments. And so we mentioned syndications, which are, for those who don't know, it's basically a way of partnering with, operators who go out and they pull together time, money, experience, and resources to go and buy a 250 unit apartment building. Or I invested in a deal that's building 100 units of in Florida, built from scratch. And so there's a team out there who find the property, they negotiate, they have contractors, they've got engineers, they do all the permitting, they do all the work, and then they're the general partner. And my job as a limited partner is to, I put my trust in them, and I assume that they know what they're doing, and by looking at their track record and their team and all these things. And then, I write the check, and then I'm done. I get, you get distributions every month or every quarter, however it's set up. And then when the thing sells in a number of years, that's when the bigger paydays come. And so, for me, it's getting into these private, non-market correlated investments. Some you need to be accredited for, some you don't. It really depends. And, I think there's a lot of wealth to be built in real estate, and working with people who truly care about you. Like these guys, and granted, there's a number of operators and syndicators who, aren't the best. They don't have experience, right? But if you find guys who you get to know them, you like them, you trust them, these people, and I have many of friends of mine, like they truly care about protecting the investor's capital. Protecting the investor's capital is a greater than their reputation. It's the reputation is bent on protecting their capital. It's greater than the profit. And I have stories of operators who've actually lost some money in their first deal or something from some investors, and then work their butt off to go and make more money, and then use their personal money to pay the investors back on previous deals. Like there's people out there who truly care, and so you can find those people. Versus the stock market and these companies and these boards. Do you think they like care about their investors and me and you? No, they don't. They only care about their golden parachutes and what they're going to make and the price of their stock. They don't care about protecting our capital. So I would say it's taking control and learning all this stuff, because it's not that hard once you really learn how it works.
You know, you share so much so that I want to peel it back a little bit, right? You first said make sure you know what you're doing, and make sure you know what you're investing in, which I think is huge with this world of NFT and crypto. I feel like I get invited to a new NFT project. I'm like, daily or weekly, and each one is bigger than the next one, and I've eyed a few NFT projects that I'm like, okay, these are things that I feel a little bit more sustainable long term. But it's something I don't completely know everything about, so I keep my investment at a high level, like in crypto. And hey, here's where I'm going to roll, and it is what it is. But when you say know what you're going to invest in, I think that's like one of those big mistakes. Like salespeople, we want to make more money. So if I receive 30 grand this month in the commission, if you could show me how I could turn 30 to 45 in 60 days, oh, totally, I'm in, right? It's just like that mentality to keep the
Yep.
money growing. And I find it interesting, that you've pulled out the stock market. You're out of, you're not investing in the stock market. Fun fact, I completely eliminated myself from the stock market not too long ago. Just it was I just my portfolio, I felt there was things that were going to be better invested for my time and my money. But how do you? So that's a long way of me saying, you talked about the syndication. Like, how do you know a syndication project's a good project versus a bad project, right? I mean, I look at it, it's almost like an NFT. Like, hey, man, I got a group of guys, and I know this because I've had people approach me for different things in the past, and if I didn't know about it or I didn't feel comfortable with it, I kind of kept I kept my money and kept my cards to my chest. So how do you identify what's a good project, what's a bad project, what's a good syndication group, what's a bad syndication group?
Sure. Yeah. Yeah, so there's a number of due diligence that we look at. Number one is who the team is. So I want to know, what their experience is. Have they done a deal like this before? So it's a multifamily syndication. Have they done a similar size multifamily? How many millions have they raised? How many successful deals have they done? Is this their first deal? Have they only done like single family homes? Is this their first big deal? Or, I've money with people they've successfully done like 8 deals, and they might have another 10 active ones, because some of these things take 3 to 5 years. So there's like a timeline to it. So I look at that. How many deals have they done? How much have they raised? I find out, does anyone I know like have invested with them? So if you can get a referral base, that's huge. I'm going to have a call with them. I'm going to see if I like them. Like, the job of a syndicator really is to help educate their investors, because they do talk to a lot of people who are new at this. And so, you're asking questions, you're trying to learn, like, are they happy to educate you, or are they a dick and they're like, you should know better? Because if you don't want to hang out with them, and you don't want to be their friend in a sense, like I'm not, there's plenty of other people out there. So that's how I get to like them. We look at their experience. We'll find out, we'll look at the business plan to decide, like, there's a couple different models. One of them is a new construction build. So it's developers who are buying land and building from scratch, right? There's new construction buys. So this is now that builder sells it to a new group, and that's a one. And then the final is usually a value add. So they're buying an existing 1970s style building, and they're renovating the units and improving them. And so we'll look at what's the business plan, and then what's the geographical location. So in markets that are hot, Florida, Texas, South Carolina, North Carolina, where everyone seems to be moving to, that's where you see these new construction and these the buys and the builds. So for them, that's where I'm looking. But if it's a new construction build in like a market that's going down, like I'm not interested in that. On the other hand, some of the value adds, they can be done in Kentucky and Ohio and, any state that has at least stable, population, the good rental markets. And, so I'll look at that. What's the business plan from what's the overall proposal, and then geographically where it's located. We then go into, the pricing of it, which are called through cap rates, which are multiples of earnings that the property is sold at. And so, for example, if it's, let's say they're buying it at, I don't know, a 6 cap, which is, without getting into it, it's a multiple of their earnings, and maybe their exit is to sell it at like a 4 cap, which is a higher price, but a lot of it's dependent on interest rates. And so then the question to me becomes, all right, in 5 years, do I think that interest rates are going to get lower to get this higher, price? So I'll look at some things like that, and do I think it's a good business plan? And then finally, what's the returns? Some of these, most of them, they project somewhere between 15 to 20% like annualized return. There's some deals that are higher risk. For example, the construction builds are generally higher risk, where it could be 50% a year, 60% a year, depending on what it is. So a lot of it is then weighing the risk versus the reward, and going from there. So anyway, number of things I look at it, but I try to look at it as a business. Like, I'm a business owner. I want to look at their business plan. I want to look at it from, if I was hiring these people, would I hire them? Like, do I like the team? Do I like the cash flow? Do I like the risk? Do I like the liquidity? And I go from there.
It's 100% just knowing who you're going to spend your time with. I love how you say, you're looking at the track record of success. So I think there's some value there in that syndication, right? I mean, versus there's more value in the syndication than some of the cryptos and NFTs that I've seen come out.
Well, and they're hard assets. So like, real estate will always have value. Like, even if it's in their 3 to 5 year timelines, right? So over that time, yes, like rents could go down, things could happen, but in 5 years, like the bricks and the sticks are still worth something, right? Versus like, I don't know, you invest in crypto, like you invest in Dogecoin or whatever, like there's nothing that backs it. What backs it is the public's opinion of it. And if Elon Musk stops promoting it, like all that money goes to zero. There's nothing that backs it. Versus, real estate, it's a hard asset. Someone will buy that thing at a price that is probably not much below, whatever you paid. So.
Yeah, I agree with you. I mean, I've made a joke with, some of the NFTs that are sold. There has to be some tangible product on the end. And so I was just talking with a colleague of mine about, like, hey, the day NFTs give me like first class seats on United Airlines, and I don't have no affiliation or whatever, the day an NFT gives me something, I'm like, okay, I see it more. As I said that, I don't know if you've seen this, there was an article that came on Yahoo Finance, I think it was yesterday, the very first home sold for an NFT.
That. Yeah.
Like, holy, I mean, I read that, I'm like, dude, that literally, it cut out the whole escrow process, according to the article, cut out the escrow process, cut out the middleman. I mean, you bought the NFT, which essentially you bought the LLC that owned the NFT, which that LLC owns that property. Is interesting. I mean, there's definitely a future there, but
it's definitely the future. But if you don't understand it, I don't know. For me, like, time's valuable, and I'd rather spend my time working on things that I know will produce a solid return. And like, it's just, when that time comes and it's more accepted and I understand it more, then yeah, I'm sure I'll find opportunities. But until then, I mean, I'll stick to what I know, and just continue to inch out my circle of understanding, right? And not try to go into a whole new circle.
I love that. You literally took the words out of my mouth, and I love that because we truly, if you don't know something, don't jump into it. And what you're saying, Brian, as you laid out this plan for developing wealth in commission-based sales or commission-based entrepreneurs, this is very strategic. Like, you not once said, hey, I'm gonna go play blackjack. You not once said, hey, this is a get rich quick scheme. Like, this is very incremental growth over time, right?
Yep.
And multiple investments, and obviously it grows really fast, but it doesn't start with, hey, you're not jumping out there and saying, hey, I'm gonna make a half court shot on my first one. I'm just gonna try.
And it's a snowball effect too. And a lot of these deals you invest, and it could take 3 to 5 years, but you double your money, and then 3 to 5 years you redeploy it, you double it again, and then in a multiple of whatever 12 years, you do this a couple times, these numbers can get pretty big. And so, but it's slow at first, right? And it's boring because you're not like There's no stock market thing to check on your phone to see what the ups and downs are. There's no like account balance you can open up to like see what it's worth. Like it's worth what you paid. So the other big thing, and I know we talked about this a little before, was really tracking your wealth. I think a lot of people don't track their wealth at least as much as they should do. We talk about tracking sales and KPIs, and I'm sure most salespeople are like totally on it. They know what their numbers are, their quotas this year versus last year, month over month growth, all their close percentages, all this stuff. But then it comes to like tracking our income, tracking our wealth. How do you track your net worth, right? And how often do you look at it? And I'm on the point that I do it monthly, so every single month I'm updating this spreadsheet, which you kind of need to use a spreadsheet because you're across multiple platforms now. It's not just whatever personal capital if all your money's connected through those types of things, but getting into syndication values. You can buy investment properties. There's appreciation, there's debt pay down. You're getting cash flow from these different things that you're investing in, and so bring it all in one place. Track it through a simple spreadsheet, and what measures gets managed, right? So if you're measuring, you're thinking about your net worth and growing your wealth on a regular basis, you will start to then think of things that, all right, what can I do to continue to build it? And you set a goal. Like I have a goal, I want to grow mine by 2% every month. And so every month I'm like tracking it to see, did I grow 2% compounded? And if I'm not, like, it motivates me to, all right, I gotta pick it up. We gotta sell more, we gotta produce more. So anyway, that's another key part is if you want to improve something, you got to track it, and otherwise it's out of sight and it's out of mind.
Catapult to Commission's Family, that you should rewind and listen to that again, because that is, we talk, you hit the nail on the head, Brian. I mean, we track KPIs, we track referrals, we track follow-up time, but when you take that same intensity to your personal wealth, your personal income, it's definitely going to grow. A fun exercise, let me rephrase it, a not so fun exercise that my wife and I do is, we live comfortably, but every now and then we say, okay, like, hey, it's subjective, not objective. We look at what is our Postmates or DoorDash fees, and I look at that and I'm like, that's outrageous. Like I don't care if I can afford it or not. You just like, man, that's a lot of, like, that's dumb. Like, why are we spending money there? And so you start, you say you track it, it grows by simply saying, hey, I'm going to eliminate the DoorDash fees or whatever it is. Yeah, it's not fun because sometimes you're like, oh, we both work, we're busy, etc. You justify it, but when you start tracking it, it grows, and those are much more enjoyable conversations. You said your goal is to grow 2%. I know when we've had financial conversations or wealth conversations, we look at where we're at this year versus last year. It's always fun to see yourself going up. It's like going to the gym, though. It's never fun to have that difficult weekly or bi-weekly, like, do we really need to do this? Is it? And you start eliminating and cutting expenses. And I've at this point in my life, I'm still finding ways to cut expenses, just because every time I cut an expense, I give myself a pay raise.
Yep. It also helps with the lifestyle creep or inflation, because you get that big check, the $30,000 check. If you go ahead and you spend it all on something like whatever, a vacation, it doesn't matter. Like, it's not going to show up on your wealth sheet, but you take it, you go and invest it into something, like your wealth is going to grow by $30,000 that month if you don't spend it all. So I think when you start to really see those numbers kind of move in month to month, and for me, it's motivating and helps. That's another component that keeps me kind of on track.
I like that. And if you look at it, one of the like the hacks that I've done, right? So I used to have this rule, and I still have this rule. Like, if I can't buy something 6 times in full in cash, then I don't buy it, right? So I'm like, if I can't buy this 6 times in cash today, I don't buy it. And I had this watch that I was eyeing. To this day, I still want the watch. So I'm like, I want this watch. So then I was like, okay, I'm going to honor my rule. I'm going to save. And this wasn't like, I'm not going to like take from my investment account. I'm not going to take from this was like, I'm going to save for this watch. Well, when I got there, I was like, I don't want the watch. Like, I didn't want it that bad anymore. Yeah. And I'm like, you know what? I'm glad I did that. I had some money saved up, and lo and behold, I'm happy that I did. And we did some other things with the money, but I didn't want the watch. And then, today, even before we started recording, I'm like, man, I really want this watch. But at the same time, I'm like, you know what? I've gotten so far without it that I'm like, It is. So it's when you look at when you manage the money that's coming into you with the same intensity you manage your sales pipeline, the money grows. So I love that. Brian, how does the Catapulting Commissions family get a hold of you? I know you've been building your business with beers, and you've been building this. So if somebody wants to learn more about working with you, or just to say, hey man, I want to talk more about syndication opportunities or learn more to do with my money, how do they get a hold of you?
Yeah, a couple different ways. Number one, Business with Beers is my podcast. You can find on every platform. So check that out. Subscribe. I know you were a wonderful guest not too long ago. And brianbeers.com. I actually have a link to download a free net worth tracker. It's the same one that I use. So I update that from time to time. But you just go in there, put your name and your email, and you can download it. And also through that's all my links on brianbeers.com. So LinkedIn, Twitter, Facebook, Instagram, any of those, someone's preferred platform, I'm there. So if anybody has any questions on any of the stuff we talked about, I'm here to help, and I want to give back and help people also create financial freedom in their lives. So
I love it. Catapult the Commissions family. You will find all those links that Brian just mentioned in the show notes. Be sure to go click on those and get access to it. I will end with this. Having the information that you just learned today and doing nothing with it is the worst thing you could possibly do, right? There is so much valuable information out there. There's so much unvaluable information. I just read a statistic that 50% of the stuff you read online is fake. Today's show is not fake. Like, this is 100%. Brian has been vetted. Like, I wouldn't bring him to you guys unless I truly believed in everything that he is sharing. So if you find yourself in that position where you're like, hey man, maybe I want to learn more about it, maybe I just want to download the wealth tracker that Brian discussed, go ahead and take advantage of that. Be sure to do me one last favor, guys. Like, subscribe, comment, let me know your thoughts. If you have questions for me or Brian, shoot them to him, shoot them to me on the DMs, all in the show notes. Catapult to Commissions family, I will see you next week.